Hey, my name's James Nicholson. Welcome to my YouTube channel. I've got two major lenders that have cut rates and cut them by quite some way. In fact, these are really decent rates that we haven't seen for quite some time. Now, this is based off the fact that the budget has now happened and the markets have looked at the data in the budget and they're saying, you know what? We think that the Bank of England is very likely to cut rates now in the next few weeks. And so that means that lenders, the rate that they get, that's been dropping. That's called the SONIA swap rate. That's been going down over the last few days based off that analysis that the markets feel that the Bank of England's going to cut. That means your lender can get a cheaper rate and they're passing it on to you, not to be kind, because the market's quiet at the moment and they want more business and this allows them to do that. So in this video, I'm going to talk about these two major lenders that have cut rates, and these are really tasty rates. So before we jump into that, if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We've just hit 51,000 subscribers, and by subscribing, you'll get all the latest property news, house price news, interest rate news, property investing tips, and much, much more. And while you're here, let's get some views on this video. Your part in that is simple. All you need to do is smash like, tickle like, do something to that like button. That really helps with the YouTube algorithm, and that really does help the channel grow. So thanks to everyone that does that. So, lenders are cutting rates. This is based off the fact that the Bank of England is more likely to be cutting rates than not in December. I think it's the 18th of December. You can correct me if I'm wrong in the comments. It's always good to get a helping hand. So anyway, just before Christmas, the Bank of England have their meeting, and it wasn't looking good because the inflation is still quite high, isn't it? We had 5 months at 3.8%. We've got to 3.6%. And next year, the expectation is that inflation will average 2.5% for the year, which is still above target, but still moving in the right direction. 2027, the inflation is expected to get back to 2%, which is crazy if you think about it. We've been talking about inflation for so many years now, and it's still not defeated. So, the Bank of England is looking at other data as well, not just inflation. And unemployment in the UK has now hit 5%. And that's likely to go up, in my opinion, because I think a lot of the stuff in the budget isn't business friendly. You've increased the minimum wage. You've already recently done that. You've increased national insurance costs. And this is going to mean businesses won't hire as much. You've got a threat of AI that's going to make people lose their jobs as well. And so unemployment going up is something the Bank of England will look at. So the SONIA swap rate is a rate that your bank borrows at. I'm talking HSBC, NatWest. These lenders borrow from bigger banks, and that's going down because that predicts the Bank of England is going to drop rates next month. So who's cut and by how much? That's what we really want to know. Well, first, let's look at Nationwide. So, Nationwide has various brands, just in case you don't know. They have the Mortgage Works, which is a buy-to-let brand. And if you have buy-to-lets or you want to know about the buy-to-let brand, they have a rate last week at 2.49% with 2% fees for a year. I made a video on that. You can click where it says Property Accelerator, click on videos and check that out. So Nationwide is their residential brand, and their other residential brand is Virgin Money, which I'm sure you're familiar with as well. And so Nationwide are aggressive with their price cuts, and that's good. That's what we want. We want competition in the market, and these guys are always trying to be one of the cheapest lenders, and they get out there very quickly. So today, as in Friday, I'm recording this on Friday. You're probably watching this Sunday, I think. This is the rate that they've cut. So they've cut their leading rate to 3.6%, which is great because it's not that long ago that rates on the whole were above 4%. So nearly 0.5% cheaper here. And this is on a 2-year rate. So a 2-year deal. It's 60% loan to value. So that means you've got to have 40% equity in there, or a massive deposit of 40%, which you're not likely to have. So 40% equity. And the fees on this are £1,000 £499. Now, I know that you guys don't like fees, right? So what I had to look at was, do they have any products with no fees? And they do. So they have a product with no fees, which is at 4.21%. And this is for 75% loan to value here. So if you've got a smaller deposit or a small amount of equity, that works for you. And that has no fees. And it's 2 years as well. So Nationwide, definitely worth looking at. They're always aggressive. If the swap rate drops, if the Bank of England cut rates at the end of next month or the middle of next month before Christmas, watch these guys. I think they'll be one of the first to cut. They normally are, so that's good. Who else is cutting? Haven't heard from these guys for quite some time, and that's Santander. So Santander are also cutting this week, and they're going cheaper, which is good because we might see something again next week from Nationwide, bearing that in mind. So Santander have cut to 3.55%, 60% loan to value again as well. Remember, these are all their headline rates. These are ones that get them the coverage and stuff like that. They have other rates if you've got smaller deposits, but they're not going to be this good. This is a 2-year deal, so not bad. And the fees are cheaper as well, $9.99. So look, that's actually a better deal than the Nationwide deal. But if you were with Nationwide, I might consider swapping with them, because then you don't have to go through the process of all the legal, solicitors, surveyors and all that sort of stuff that adds thousands of pounds in costs and takes ages to get sorted. So if I was with Nationwide, I'd do an inter-account switch. But if I was looking for a totally new lender, let's say you're on a rate of 5% somewhere else with HSBC or something like that, these are two options for you, both very, very competitive. So go and check these out. I think you're going to start seeing some more lenders cutting rates over the next few days as we get more certainty that the Bank of England are going to cut. What we want to look out for is the markets are saying 90% chance of cutting. As it gets closer to that meeting, the Bank of England will be doing press talks, they'll be doing media coverage, they'll be doing interviews at universities, business conferences and stuff like that. Listen to what they've got to say. If they start saying, we need to wait and see what happens with interest rate cuts, the markets might adjust, meaning we're less likely to cut. They're not going to go out in the media and say, we're cutting in December or we're not cutting. They will hint and imply, and that's what we've got to look at. Right now, they're not changing that. And so that means I think we've got a good chance of a cut in December. Now, before you go, it's pretty much the last day of our Black Friday offer. Well, it is the last day if you're watching this on Sunday. And we've got an incredible deal. We've got something called the Property Accelerator. It's packed with courses on how to invest in property. And look, I've been a buy-to-let investor for decades. That isn't working at the moment. It's just too difficult. You can't buy a new build property and rent it out as you could and make money. You've been able to do that for decades, but it doesn't work anymore. So you need the new strategies like buy, refurbish, refinance, rent, where you add value, you build equity in property. There's a course on that. Renting to rent, where you rent a property and you rent it out. You get that control off another landlord and work with them towards that. That's a strategy if you don't have big deposits. And then you need to cash flow these. Do you do serviced accommodation, Airbnb? There's a course on that. You can see if that strategy works for you, or HMOs. What we're giving you here is a property toolbox, all the strategies, so you can learn all of them for a fraction of what everybody else charges, and then figure out what's the best strategy for you. So in the description is an opportunity to grab that, and it'll be pinned in the first comment. Grab it before it goes, because it will be gone by tomorrow. So do check that out while you're here. Do check out all the other content as well on the channel, including this video right here.